All right, let's get started. Thank you for joining today's webinar, How to Comply with Carbon Legislation. Today, we will, together with our experts, walk you through the applicable carbon accounting legislation in some of the biggest markets, EU, UK, and the US. And at the end, we have some very exciting news for you as well, where we will show you our new free tool, the Carbon Legislation Tracker. So make sure to stay tuned throughout the webinar. So before getting started, I'm Cassandra Julin. I'm head of PR and communication here at Normative, and I will guide you through today's webinar. This webinar is recorded, so you can share it with colleagues afterwards. Please use the Q&A function to ask questions. We also have an open chat. Feel free to talk to each other in the chat. And we also have my colleague Aaron, who will respond to smaller, quicker questions in the chat throughout this webinar. But before getting started, let's kick off with a poll. So what we would like to know is, do you measure your carbon footprint? Yes, no, or I don't know. Okay, let's give everyone a minute to answer. Do you measure your carbon footprint? Yes, no, or I don't know. All right, let's get the answers up to see. 58% do measure the carbon footprint, 34% no, and 8% don't know. Interesting. So before kicking off, I'd like to share a few sentences about Normative. So, Normative was founded in 2014, and that means that Normative is the world's first carbon accounting engine. We help you calculate your entire carbon footprint, which also helps you to take control over your emissions and reach your journey to net zero. What it means to calculate 100% of your entire carbon footprint means we calculate scope 1, 2, and 3 emissions with over 30 million data points. We help you engage your value chain, looking at hotspots. Where are the biggest climate impacts that you can make in terms of your reduction plan to help you on that net zero journey? We also support you to share your journey with external stakeholders, employees, and customers. And we help you become compliant with applicable legislation, which is one of the hot topics today. Here are some of our customers that we're currently working with. And we also very much engage in the external dialogue. So we are working directly with the UN and other key policymakers. You're going to hear a little bit more about our work together with SME Climate Hub and the UN Race to Zero. And we also feature recently in the Washington Post, CNBC, Bloomberg, and Sky News, amongst others. So if you're curious to know more about Normative, feel free to read up online, visit our website, or look up us in the media. So without further ado, let's kick off with our first speaker. And let me stop sharing for a second. All right, there we go. So our first speaker today is Lucia Bushman. She's climate strategy at Normative, and she will run you through the first of the legislation today, looking at the US SEC proposal. The floor is yours.
Hello, everyone, and thanks a lot, Cassandra. So there is currently no comprehensive mandatory carbon legislation in place in the US. However, recently, a new proposal on non-financial reporting requirements has been presented by the US Securities and Exchange Commission, in short, SEC. So who has to comply with these reporting requirements if this proposal gets adopted? This applies to all companies which are publicly traded and registered with the SEC. And it applies to both foreign and domestic registered companies. And these requirements would be phased in between 2023 and 2026. So what is it that companies need to report on? all registrants would need to report on Scope 1 and Scope 2 emissions. Scope 1 emissions are direct emissions from, for example, fuel combustion, and Scope 2 emissions are indirect emissions resulting from purchased energy. Large companies furthermore need to report on their Scope 3 emissions, which are the indirect emissions resulting from a company's entire value chain. Companies need to report on Scope 3 emissions if they have a material impact on their business, or if they have already set Scope 3 goals or targets. Smaller reporting companies are exempt from reporting on Scope 3 emissions. And you might wonder what disclosure frameworks is the SEC proposal aligned with? And the proposal is based on broadly accepted disclosure frameworks that are already commonly used by companies. One of them is the Greenhouse Gas Protocol. It is the most widely used greenhouse gas accounting standard. And it builds the foundation for the most commonly used reporting frameworks, such as the CDP and GRI. At Normative, all our calculations are also based on the Greenhouse Gas Protocol. Furthermore, the proposal is aligned with selected key aspects of TCFD. This is the Task Force on Climate-Related Financial Disclosures. And my colleague Maya will address this a bit further on.
Thank you. So that was the short highlights of the upcoming US SEC proposal. Moving on to the next legislation we're going to talk about today is the SECR TCFD. So these are real tongue twisters. And Maya, product manager here at Normative, will help you walk through these tongue twisters.
Yes, thank you, Cassandra. So first of all, we have the streamlined energy and carbon reporting. And this was introduced in 2019 to encourage energy efficiency measures with both economic and environmental benefits. And it's meant to reduce emissions, especially related to energy use of UK businesses. It covers around 12,000 companies and includes quoted and large unquoted and LLPs in the UK. And what's included are those that have a turnover of more than £36 million or more than 250 employees, and also more than 40,000 kilowatt hours used within UK. All others that do not fall within these lines are encouraged to report as well. So what is included here is that quoted should include their global Scope 1 and 2 emissions and intensity and the underlying energy use, and also comparisons from the other years. The unquoted and LLPs should include UK energy use from electricity, gas, fuel oil, and also the related emissions to that. Also the intensity. And it's also important to report on measures taken each year in a narrative on what you're doing to increase the energy efficiency. The guidelines from SECR also strongly encourage all businesses affected by CCR to voluntarily report on their Scope 3 emissions, especially where this is a material source of emissions. As a complement, the UK government also recently introduced the TCFD regulations. So this is the Task Force on Climate-Related Financial Disclosures. And this was adopted into law in April 2022. So it's a very recent addition. And this one is implemented to complement the CCR reporting to be more extensive and ensure that risks are considered and that emission reduction plans are actually set. And this is part of UK's plans to have the most green financial system in the world. So it's part of their net zero strategy. This TCFD requirement covers around 1,300 companies and includes UK's largest traded companies, banks, and insurers, and also some private companies. And it includes those that are above 500 employees and with 500 million pounds or more in revenue. However, the TCFD is actually planned for 2025 to be introduced to the whole economy. So it's something to watch out for. So what is that you need to report with the TCFD requirement? Well, First of all, it's the most climate-related risk and opportunities. And this includes how they are identified, assessed, managed, and integrated. You also need to report on key targets and performance indicators and the resilience of your business and business models in different climate scenarios. In the TCFD description, this also includes mandatory Scope 3 disclosure if these are material, which in modern business today, they often are, where the main risk is often in that supply chain where 93% of emissions often lie. So this is definitely a material risk, and we can see how the regulations are broadening and moving towards Scope 3 emissions and the supply chain. So businesses need to prepare.
Thank you, Mayan. So moving to our last legislative framework that we are going to cover today is the CSRD. We're continuing with the tongue twisters that my colleague Asna Dodi is going to walk you through. So welcome, Asna.
Thank you, Cassandra. Hi, everyone. As Cassandra mentioned, it's another tongue twister. Well, CSRD stands for the Corporate Sustainability Reporting Directive. And this is the new EU legislation requiring all large companies to publish regular reports on their environmental and social impacts. And most importantly, this includes Scope 3 reporting. So what do I mean by large companies? Well, large companies by definition would have to meet two of these three conditions. Either they have over 40 million euros in net turnover, or over 20 million euros in assets, or lastly, more than 250 employees. In addition to this, it's not just for EU-based companies, but non-EU-based companies which have subsidiaries operating in the European Union must also comply by this legislation. And why was this brought into place? Well, it's to help investors, consumers, policymakers, as well as other stakeholders to help evaluate large companies' non-financial performance. After all, undetected carbon is a business liability. Currently, there is a lack of a standardization and comparability when it comes to non-financial performance, such as carbon emissions. There is a global standard, the Greenhouse Gas Protocol, which we use here at Normative, but there's lack of accountability for companies to comply. But this legislation will be coming into force January 2024. So companies are required to report on January 1st for the 2023 financial year. This will be replacing the Non-Financial Reporting Directive, NFRD, another tongue twister there for you. And this may seem far away. You may think, oh, we're in 2022, 2024. Well, there's quite some time, but it's important to start measuring now in order to comply with the legislation then. And this interacts with other pieces of EU legislation, and this includes the Sustainable Finance Disclosure Regulation, which regulates disclosures for the financial market, SFDR, and also the EU taxonomy, which supports both this and SFDR, which I mentioned earlier, by providing classifications to identify which economic activities are environmentally sustainable. Thank you.
Thank you. Asna, you mentioned at the end the two other frameworks. How are they? You talked a little bit how they overlap with the CSRD. Are they additional? If I'm in the finance sector, do I have to know them as well, or is it enough to know one of them? How do they interlink and overlap?
Well, the idea initially, SFDR was mainly focused on the financial sector, so equity firms and things like that. But now CSRD includes other companies which are operating in the EU. So it does overlap, but I think CSRD is more focused on large companies which are operating in the European Union.
Thank you for clarifying that. So these were the three legislations that we had on the agenda. I understand you have a lot of questions, so please put them in the Q&A and we will try to address as many of them as possible in the next 30 minutes or so. But before doing that, let's do another poll. So is your business required to report on carbon emissions? Yes, no, or I don't know. it's a tricky field, so it's not perhaps a clear-cut answer, but we're hoping that today will shine some light on this question for you. Right, let's get the results. 46% yes, 38% no, and 16% I don't know. All right, that's very interesting. So thank you to Lucia, Maya, and Asna for the presentations. We're going into the next section now, when we will have our panel, and joining our three speakers is Alexander Schmidt, who's head of science and climate research at Normative. So, I mean, going around the tables for the three different legislations, we could start with the US. What would be the fines or penalties for not complying with the legislation? Lucia.
Yes, and this is a very new piece of legislation. It's not even a legislation yet. It is still a proposal that was out for consultation from the public. And the public comment period just closed on June 17th. So there is no clear answer to this question yet. However, the SEC chair, Mr. Gensler, did confirm that the SEC will use the full extent of its enforcement powers to enforce this legislation. And yeah, this is a very vague answer, but we will see in the future after the legislation has passed.
Wait and see. That's understood. So what about the UK legislation, Maya?
Well, for the SSER, there are no fixed penalties specified, but there are consequences if you do not comply. So, for example, your accounts cannot be signed off, and it could lead to civil penalty if missing those filing deadlines. But the TSFD actually could result in fines of £2,500 and maximum £50,000. So definitely something to comply with.
Yeah. And what about the EU legislation, Asna?
Well, once approved, EU directives, it becomes part of national law in countries which are part of the European Union. So this means that the country in which your business is based will then take the decision regarding how this will be enforced. So for example, in Sweden, if failure to comply with CSRD, it would be a violation of the Annual Report Act, which includes penalties for minor offenses, which would be a fine or a prison sentence for a maximum of 6 months. Regular offenses, it would be a prison sentence of a maximum of 2 years, and major offenses, it would be a prison sentence from 6 months to 6 years. So it's really important to comply with CSRD.
Well, yes, all of them, I would say. Prison, fines. Yeah, it sounds like this is definitely something to do, not just for the climate, but, you know, as you were mentioning, Asna, it's good for business, and it's a risk management for your business to keep track of this. So we got a couple of questions coming in the Q&A right now. So first one, what is the role of carbon credits over CSRD, and how are these reported?
Yes, so I mean, the first step would be to measure your actual emissions. And based on that, then carbon credits could be considered. But with carbon credits, it is important to note that to avoid greenwashing. So if you are purchasing offsets, to know that if that project is actually helping remove carbon, rather than having the risk of potentially finding out that those projects actually don't exist or have been sold multiple times. So it's better to be careful, I would say, when it comes to carbon credits.
Yeah, thank you. And maybe Alex, you want to speak a little bit about that as the research representative right now in this panel. We are looking at, you know, 4 buckets, so to say, when it comes to climate investments. Do you want to speak a little bit about those and why those make sense from a, you know, greenwashing and climate perspective?
Definitely, thank you. So there is actually a need to invest in climate solutions. It's a fact that we cannot get to net zero emissions by 2050 without significantly removing also carbon from the atmosphere. So unfortunately, we have passed the point at which turning, off the tap will prevent the bathtub from flowing over. So there is a place for it, and they are relevant in the context. But as Asna was just saying, it's so important to not rely on them, kind of trying to buy your way out of this, proclaiming carbon neutral targets, which are maybe a short-term solution, but this will not bring us there. So carbon removals, permanent, those will be part of the mix, but many projects unfortunately lack transparency and lack permanence, meaning that they might suck some carbon out of the air, but maybe not the promised amount or not in the promised duration. So it is so important to set your targets based on reduction. And then, of course, anything you cannot get rid of, like the last 10%, you should invest, but it's not a way to make a business future-proof to buy a way out of this.
Yeah. And we have a lot of reading on the Normative website about climate investments if you're interested to dig into further about it. And we had a webinar earlier this year, so feel free to watch that recording if you're particularly interested in that. Lots of questions coming in. This is a follow-up for you, Alex, again. And I agree with these questions. There are so many legislations and framework. Why don't they just consolidate them to make it easier for businesses to do the right thing?
We would love that to be the case. I mean, the fact is emissions are global, right? I mean, if I am putting something up in the air here, it will not stay in my jurisdiction because the next country has a different legal environment. The fact is emissions are global, and so should the emissions laws. So they should also be global. We're getting there, hopefully, eventually. So we have now in this webinar, in the first half of the webinar, mapped out the biggest areas, EU, UK, US, that are already implementing those laws, and they are surprisingly well aligned in direction. So we'll all see it moves towards more encompassing reporting, meaning you have to be aware of your scope 3 emissions in particular. It will not suffice anymore to only look into scope 1 and scope 2. So while it can be overwhelming to say what is not relevant for me and why don't we have one guideline, to make a business future-proof, I think the rule of thumb is all of your emissions should be accounted for, and especially your value chain. Look into your value chain, otherwise you will not get there. You might get past the next year, but ultimately you will hit a wall, and then it will really be a real crash, and not like a gentle land. It will really impact your business. So scope 3 will come, and will come in all of these frameworks.
Yeah, and that's something that Maya talked about in her short presentation as well, that scope 3 is really essential. If you're only measuring your scope 1 and 2, you're only measuring the tip of the iceberg. If up to 90% of your emissions are located in scope 3, not measuring that could actually be a huge risk, and a risk of greenwash if you're not transparent on what you have measured and what you have calculated. Next question. How will the UK take forward the implementation of TCFD across the economy? This seems particularly challenging for SMEs. And I think for SMEs, Maya, this is something that you are quite passionate about and like to specifically comment on, right?
Yeah, definitely. So first of all, on the legislation for smaller companies, usually what happens is that for the smaller company, the less intensive the regulations are. So that it will be included to report on scope 3 emissions, for example, is quite unlikely. But that's also because the bigger companies, that's where the scope 3 emissions are really material and really important. While for the smaller ones, it's getting like scope 1 and 2 down to net zero is actually the most important. And this we can also see in science-based targets initiatives guidance for small businesses that actually they focus on scope 1 and scope 2. So that's just one thing with the TCFD, and they have not planned exactly how to do this. They just know that they want the whole economy to go towards net zero. So that's why they are looking into how to introduce this to the whole economy. But for SMEs, there are getting more and more tools out there that SMEs can use. For example, we have the Business Carbon Calculator by Normative, which is available on the SME Climate Hub, where you can calculate your emissions totally for free and get your emission estimate very quickly in an easy way without having a lot of knowledge beforehand. And we know that these tools are incredibly important, as most businesses in the world are actually SMEs. So we need to make sure that these are included on the net zero journeys. Without them, we are in trouble. And the same goes for that the large companies have supply chains where these SMEs are part. So actually for that scope 3 decarbonization that we need across the economy, it's vital that SMEs are included within these decarbonization efforts. So yeah, it will be challenging, but that's also why we, together with google.org, with their support, developed the business carbon calculator, and why we are cooperating with SME Climate Hub, who have a lot of tools and resources out there for SMEs to make that journey as easy and low cost as possible.
Thank you. And I think that's, head on the nail, talking about why the SMEs are so crucial. If we said that up to 90% of the emissions are located in the supply chain, and supply chains are majorly made out of SMEs, you need to engage them in order to succeed with your reduction plans. More questions coming in here. Do these legislation apply to companies' operations in other countries, like outside the US, UK, and EU? Yeah, who wants to go first?
I can start. Oh,
Asma, go ahead, please.
Yeah, so from the EU perspective, if the company is initially based in the EU, then they do need to report, even if their operations are outside it.
Yeah, and what about the US?
Yes, also in the US, it applies to every company that is registered with the SEC. So both companies from the US, but also international companies who are registered with the SES. They need to disclose, they need to engage in financial disclosures, and then also climate-related disclosures.
Thank you. And EU? Oh, sorry, which one have we got left? UK, sorry.
Yeah, so for the UK, it's different depending on the size of the companies. So actually, as I mentioned, that the LLPs and unquoted companies do not have to report on emissions outside of UK. However, with the TSFD regulation, that's one of the main risks, is to, of course, consider all your locations, as it might be higher risk to have a coastal location in Spain than in the middle of UK, for example. So definitely that TCFD is pushing on towards global reporting, and for bigger companies, they are already required to report on global emissions, so not only on the UK subsidiaries or companies.
Yeah, and the next question is kind of linked. It's asking that reporting on scope 3 can be mostly reporting on other companies' emissions, like your supply chain. How is the duplication of emissions reported by different companies evaluated on a country level? So perhaps on a bigger level, Alex, do you want to address this question of double counting and double reporting, and kind of how you view this on a bigger scale, and then we can dive into the different legislations?
Perfect, happy to, yeah. I mean, the issue of double accounting or double reporting, we do hear this again and again. However, we have the bigger issue with underreporting, meaning you just carve out a lot. So everyone, I think even Greenhouse Gas Protocol themselves, they are very vocal about not being perfect and not being, it's not set in stone. It's going to develop. There's going to be updates, et cetera, to their frameworks. But double accounting right now is not our problem. Our problem really is underreporting. So while there is, of course, an overlap, if everyone were to report their scope 3 emissions fully, we right now need this momentum to build up to actually take responsibility, and especially for the large enterprises to take responsibility for the supply chain, because they usually have the means and the manpower to actually take action. Maya was just referring to the smaller companies. They have now great free tools out there. UN Race to Zero with the SME Climate Hub, of course, supported by Google and us, did a lot of work in that realm. But ultimately, the big companies can really encourage the small ones to take action and help them to get started there, so that the scope 3 double accounting is not an issue, but it's actually going to help us to gain momentum.
Thank you. And Maya, Asna, and Lucia, is there anything you want to lift from the different legislation in terms of scope 3 and double reporting, or?
I have to agree with what Alex said, that the challenge right now is that we are underreporting. So it's important that we start to report as much as we can.
Yeah, I think I would just also agree with that. And I think even with this global supply chains, I think it's important to consider where, yes, we have regulations now in US upcoming, EU and UK, but we also have a lot of other countries in the world, and a lot of those emissions going into that, if we look at the consumption based, which is actually the companies that then sell to the end user, will come in this scope 3. So of course, especially now, as we have actually quite a short time frame to start this net zero journey, we need to halve emission by 2030. It's super important that the scope 3 is not missed, as it is a global problem.
Yeah, thank
Yeah.
you.
Just adding the US perspective here, it is exactly as my colleagues already mentioned, and also the US legislation is quite tailored to fulfill investor needs, and also companies should disclose risks and opportunities related to their business, and massive risks can occur in scope 3. So it is it takes the lion's share in a company's carbon footprint, and it is really beneficial for companies to focus on scope 3 and address those risks.
Yeah. And what about third-party reps? There's a question on that. Would they be considered your supply chain or value chain? I think we can have this as a general question. We can also get back to it if it's not completely clear.
I think some clarification would be in order, yeah, but I think in general, companies tend to underestimate what their value chain entails. I think you'll be surprised like what is actually in the realm of your influence and thus responsibilities. So it is called indirect emissions because you cannot control them directly, but kind of all kinds of services, even consulting services or lawyer fees, those are all like part of your value chain. That's what you need to actually fuel your operations. So if in doubt, yes, they are part of it because you need those entities to continue business, and then you need to take them into account when you do your reporting.
Yeah. Next question: how does the CSDR overlink or overlap with the GRI universal standard? If someone would like to address that one.
So I can start. So with CSRD, the main addition is that the scope 3 reporting, which previously was not required by EU legislation for large businesses. So that is something that has come into force. If any of my colleagues would like to add on to that, please do.
Yeah, I think actually we're gonna get back to a nice example later on to kind of keep the excitement around this, where I'm gonna show you a bit the interplay of how these could be or should be understood in combination. So maybe bookmarking this one, and you will see both frameworks flashing up in a bit.
Yeah. There is a question on approved reporting templates. This one was for the CSRD, but I think we can ask the questions for all of the legislations. If you want to start, Lucia.
Sorry, could you repeat the question?
If there are any approved reporting templates.
Yeah, again, for the example of the US, it is difficult to say since the legislation has not been adopted yet. So also here, I would say it is really crucial to observe what happens after the summer, because now the SEC will carefully read through all the public comments and then will make modifications. But I would assume that after that period, when it's actually clear what needs to be disclosed, that there will be templates brought up. Yeah.
And what about the EU? Are there any templates for reporting?
Yes, similarly, as the legislation has not actually gone into force, I believe when we're closer, those will be coming through. My assumption would be that for emissions reporting, it should comply with the Greenhouse Gas Protocol, as that is the most widely used, and it's a global standard. But moving closer to the date, I think more specific details will come through.
Thank you. And for the UK?
So for the UK regulations, there's no template, to fill in answer this, but there are definitely very clear guidance on exactly what to include, which is available on the UK government websites. So it is quite clear actually what you are required to include in all cases. And if you ever need help, that's also something that Normative, of course, if you are with us with this, we help you with, to make sure that you are complying.
Excellent. And that's a great piece of information that, of course, we would help you all the way with your reporting. We have a question on consequences of greenwashing. And, you talked a little bit, what are the kind of non-compliance with the different legislations when it comes to greenwashing? I mean, this could fall into a bunch of different legislations and laws. This could fall under the marketing law if you make false marketing claims for your product, and so on and so on. So I think this question perhaps is best addressed to a lawyer. So we will park this one for now, but I think it's a very interesting opportunity, and it's very, not opportunity, a very interesting risk. And it's very, very clear that, not doing the right thing can have consequences, both for your business and personally. We heard about prison sentences and so on. So it's quite important to make sure that you're on top of this. We're also getting a lot of questions on businesses that are located in one place, have operations in others, and kind of how to navigate this environment. And this is something that we will address a little bit later. So I'm posing these questions and asking you to be a little bit patient on those. Let's see what else we have. How is the emission reporting related to emission taxes that need to be paid? Does someone want to address that one?
Maybe from a very, very high level. So there's no one size fits all answer to this, obviously, because we have such a fragmented tax code around the world. We are not, forecasters when it comes to what is going to be the new tax policy and laws when it comes to carbon. I think it's safe to say that regulations will only increase. So we have seen by now we have more than 2,000 different climate laws or policies around the world, more than 2,000. So that's a huge variety, you can imagine, as it applies to all these different regions. Now, this will all mean that these governments, these regions, they set also targets for themselves. You see more and more countries, regions proclaim EU is going to be reducing the footprint by 55% until 2030. How do they do this? Well, the companies in the jurisdiction, they need to be on board. Without those, you will never get there. So ultimately, if you kind of follow this logic through, you will see there's going to be more and more legislation around your own reporting, or there's going to be more push factors such as taxes imposed on your carbon or even on undetected carbon. So you don't even know that you have this in your value chain, but still you're going to be taxed and or fined or have to report on this at least. So while we appreciate that all of these US and also partly the CSRD is work in progress, it's going to be there. And when it's going to be there, you have to be prepared. And that is not going to be an easy task for the companies to tackle when they kind of address it just as they are kind of seeing the framework popping up in the email inbox.
Thank you. There's another question, Maya. We talked about this in the hallway as well a little bit. What about if your business falls outside of the legislation? Can you put your feet up and sit back and relax and watch everyone else do the hard work?
That would be nice, right? No, definitely
not for climate, but maybe for the
not
business.
for climate. No, but definitely what we will see with the Scope 3 increasingly being things that you need to report on is that this will trickle down throughout the value chains. So even the SMEs and those that are not covered by these will, because they are suppliers or customers to these bigger corporations, have to report, especially on their Scope 1 and 2. And as we also see this, that there's going to be a push for more data accuracy from the suppliers. So I think getting ready to start measuring already as soon as possible and starting to get that baseline is something that all SMEs should do as soon as possible to be ready also for when those questions comes from your customer. Otherwise, you have very many risks of losing customers, and there's a business opportunity there as well to actually be in the forefront of your carbon tracking.
Yeah, thank you. A question on the CSRD. At what point will it come into effect?
So from 1st of January 2024, so by then companies will be required to report for their 2023 financial year data.
Excellent. Thank you for clarifying that. All right, let's see if we can get one last question in before moving on to the next session. And I mean, I know we have some unanswered question in this webinar, and we will try to get back to you on an individual basis also after the webinar to make sure that we answer as much of it as possible. But time is limited and we're having a lot of fun. So maybe going around the table, what would be your last recommendation for businesses operating on these markets going forward? So perhaps let's start with Maya.
I mean, the first thing is to get that baseline, no matter your size, use the tools available to you and get that first measurement done if you have not already. And then start looking at those risks as soon as possible. And this includes your whole scope 3 value chain. So really make sure that you use a method where you can include everything and be rather comprehensive and avoid greenwashing. Risks also include these reputational risks, include these legislative risks, and all these risks should be included when you set up your business and as integrated as possible in your risk management, which is the TSFD requirements, recommendations as well. So I would just say start measuring and set out that net zero strategy, and you start taking those reduction actions as soon as possible.
Thank you. And you might be surprised that when you do your first measurements, you're going to identify some hotspots, and the first actions are normally the easiest one. The further down the line you get, the trickier it gets. So you might actually be pleasantly surprised when you start working with your emissions. Asna, from your perspective, what would be your key recommendation?
Yeah, completely agree with what both you and Maya said. I think the first step is to start measuring, and only what gets measured can be reduced. So regardless of how small of a business you are, whether these legislations apply to you currently or not, it's good to start measuring, because then you might actually realize it may be easier to reduce in some areas and can then set out on this journey towards net zero. It's better for the climate, and it's also better for business. Yeah,
fully agree. Lucia, from your perspective.
Yes, I fully agree with what has been said already. Also, regarding the US, even if the legislation is not adopted yet, it will entail measuring scope 1, 2, and for large companies, scope 3. So the earlier a company starts to measure, the earlier you have insights into your value chain, and you can reduce and improve. So you can't start early enough, but also keep an eye out on the updates that the SEC will bring forward.
Thank you. The early bird benefit for sure when it comes to carbon accounting and reducing your emissions. I'm going to hold this question for you, Alex, a little bit, because we have some really exciting news to share before I'm going to put you on the spot. So without spoiling it further, we talked a little bit about it, and it's a question that keeps coming back. How do you actually know and navigate through this complex environment? What actually applies to you? So Alex, why don't you talk a little bit about our newest tool that we're launching today?
I am happy to, and actually very excited to share some news here with you, because we've been now talking a lot about the different frameworks. You had really great detailed questions there, some of which we have bookmarked for in a bit. And I can also imagine many of you have, with a legal pad on the side, made some notes on relevant frameworks for your region, for your company as such. Now, if we zoom out a bit, kind of summarizing also the conversation as we have just experienced it and heard it, the general move, the general tendency, I mean, our founder has just been to Davos, addressing world leaders at Stockholm Plus 50. Everything we hear, and also, of course, now a bit reflected in your questions, you are all aware that there is more coming at businesses, no matter what the size. So we're going to see more and more smaller businesses being affected, as I think Maya said, either directly, or you're going to be part of a company's value chain, and those companies are going to put some requirements on their procurement policies. You're going to be you have to be aware of and you have to quantify all of your emissions. So the tendency is to go more and more towards scope 3, which is an important step towards more. That's the last point, transparency and comparability, so that we actually know what numbers compare in what way to each other. So that is a bit kind of the wrap up about what does the future hold. So if you take one thing away from this, I think it's really about comprehensive carbon accounting and reporting, including your scope 3. And there, of course, also the upside. So the opportunities, if you are, I think, as I just mentioned it, if you're early in this race, you're going to have great overview of everything that is happening in the value chain, and you are prepared for all of those legislations. So they don't need to be threatening. They can actually invite you to shift to a more sustainable, more future-proof business model. And we at Normative, we don't think that this should be anything that is a privilege to, that only large companies have, that have the complete overview because of the resources and insights. No, we believe that this should be something everyone needs to have access to, because if you do not know what's coming at you, it's difficult, of course, to prepare fully. So that's why we at Normative, and this is super exciting for all of us, all of our customers, and of course, hopefully all companies that are listening right now, we have put together a carbon legislation tracker. With this tool, you can easily, in a few steps, which I'm going to show in a minute, get hold of all of your mandatory, voluntary, but also industry-specific guidelines and frameworks that you need to be aware of. In addition, it will show a few consumer trends so that you also know where the market is heading outside of the strict restrictions or the strict legislation. Now, without further ado, let me jump right into the tool. So I'm quickly gonna share this landing page. I hope you can see the entire screen. Otherwise, I'm sure someone will tell me if not.
Yes, thank you, Alex. It looks great.
Perfect. So the tracker will first, of course, welcome you and give you some idea of what is coming, what is the outline of the entire tool. Now, let me just get rid of the menu bar. Then you go on Get Started, which is just a quick framework which asks you to input 5 of your high-level company information, because we just heard it's so different right now still. What is the current state of legislation in different regions, business areas, etc. So let's just run through this quickly. What is my region? So you could, for example, say, we're in Sweden, so we would click, it's a UK-based company. You could, of course, also change to other regions based on your company's main location. We then ask for the industry, because as we heard again before, this is super relevant to be aware of industry-specific guidelines. So let's just say in my example, I'm a transport company. How many employees? Again, we've heard it before, there are different restrictions applying to different company sizes. And then what is my company revenue? Again, to make sure we pick the right frameworks for you. And lastly, whether I am a publicly listed company or not. And now, after you've inputted these 5 pieces of information, you will get all of the relevant frameworks right into your inbox so that you can store them, forward them to colleagues, etc. Or, of course, you might also jump right into the browser view, which I'm showing and sharing with you here now. So this is my test company. I just put into the system, EU-based transport, larger than 500 employees, and roughly 40 million or more than 40 million euros in yearly revenue. So now you get the full overview. You get mandatory requirements. What is here right now? You see the first one is NFRD. It came up in our conversation. It will soon be replaced by the CSRD. So you see it down here, upcoming legislation. Be prepared for what is coming at you here. So those are, in this example, then the most relevant ones for this company. Further down, we of course also want to share voluntary reporting frameworks, because those might also be, at least at the minimum, good investment to look into. So TCFD, we've heard in the UK, part of the mandatory framework. EU, not yet, but very good guideline. And also down here, we see, for example, the GRI, which I was bookmarking before. So just coming back to this one here, you now can easily see the interplay of the different frameworks. So GRI, not mandatory, but you get an overview of what is actually in there. And you could also dive more deeply into this by clicking the link to go to the actual source of this framework. Last but not least, you have specific guidelines for your industry, in my example, transport. And you have very important consumer trends that you can share, that you can prepare for. Again, also, of course, always with resources to make sure you're not missing anything. Again, very important, this is a fast-paced, fast-changing environment. So we will make sure that this overview is always up to date. You can always, of course, reach out to us because there might be more questions to this. There might be more help or guidance needed. So don't hesitate at all to reach out for more advice, comments, and other questions. But this tool, and we are really excited to get this out finally, is future-proofed and helps you to get on the right track to prepare your business for what's coming at you in terms of reporting legislation.
Thank you, Alex. So what you're telling me is based on 5 simple data points, we will tell you what reporting frameworks that is actually applicable to your business.
Exactly, yes. So we need, of course, to have some information about your business because there's such a variety right now, but it's, I mean, you just saw it and I took my time, right? You just saw how I clicked through this. So it's like less than a minute probably, and you have your report in your inbox.
Yeah, and that's fantastic. And the other thing you said is we're going to keep this up to date. And I think that is really crucial with a rapidly changing legislative environment. What was true 1 year ago may no longer be true. And to keep up to date with this as a business might be really daunting. I mean, what we try to do here really is try to make this legislative complex carbon accounting environment simple for you as a business. But of course, when it comes down to the details, you're very welcome to contact us. You met a few of our climate experts today. And if you reached out to book a demo, we will make sure we guide you through every way of the reporting frameworks and what you have to do on all the different things. So huge thank you for presenting this, Alex. What would be your key send away to businesses that wants to do the right thing now?
I think it's a lot about transparency and about completeness. So prepare yourself, that is for sure. Don't be afraid. I think that's also important. It can be super overwhelming, but you have help. So you have this tool, you have other resources, and you have, of course, experts and these webinars. So there's always a way. And of course, Normative would love to be with you all the way. And with this tool, you have now the one-stop shop to inform yourself, to prepare yourself. And then the earlier you start measuring everything that you have in your greenhouse gas inventory, the better you're set up for the future.
Thank you, Alex. So with that, after wrapping up this session, we would love you to stay on just for an extra minute to answer 3 simple questions to make us get better and sharper at our webinar offering for you. Great thanks to the speakers, to the panelists, and of course to you participating in today's webinar. A reminder that the webinar is recorded. You will receive the link afterwards. And let me mention again that you are always welcome to reach out to Normative and book a demo with one of our climate experts. So with that, I would like to wish you a wonderful day. And if you want to access the tool, visit normative.io. See you next time.